It's the battle of the banking giants. HDFC Bank and ICICI Bank have both, remember, reported steady Q2 numbers, but with very different growth drivers. Now, HDFC Bank's bottom line got a big lift from treasury gains, while ICICI Bank's strength really showed up in the core operations of the bank. So the question now is, who is better placed for the next leg of growth from the banking space? Let's take it straight across to Vishwanath for a deeper look at it. Vishwanath.
Right. So if we were to look at where the two big giants of the private banking industry are placed, ICICI Bank obviously has had a operationally strong quarter, even though its loan growth has lagged, at about 10.6%. It's slower than what we would expect from a bank like ICICI Bank. On the other side is HDFC Bank, and their profitability has gotten that boost primarily because of the treasury gains that have come in during the current quarter. Threefold rise on the treasury gains, which is what is boosting that profitability. If you were to look at the guidance that both these banks are giving, that's where the divergence starts. If you look at what ICICI Bank is saying, they're expecting a better second half of this current financial year. So the October-December quarter and the Jan-March quarter will be driving growth for ICICI Bank. On the flip side is HDFC Bank, which says that they expect only growth coming about FY27, because currently, of course, they're dealing with a loan-to-deposit ratio problem. So try to break this up and sort of give a like-to-like comparison between the two lenders. If you were to look at where profitability is, as I said earlier, HDFC Bank inches ahead because of the one-time boost. However, treasury gains are notoriously unstable, so you will likely not see this in the coming quarters. ICICI Bank saw about a 68% fall in the treasury gains, which affected the overall profitability. The next metric to look at is loan growth. HDFC Bank at about 9.9%, just a shade below 10. Deposit growth at 12%. On the flip side is 10.6% loan growth for ICICI and the deposit growth of 9%. Here again, HDFC Bank numbers look slightly better, but there's more to the story behind this. So we'll look at the next metric to understand what exactly I'm talking about. The asset quality front. That's where ICICI Bank seems to be doing better than HDFC Bank. At HDFC, there was one single account which was upgraded during the quarter, which is making asset quality look better. On ICICI Bank's side, asset quality is looking better, but that is largely because of organic developments that are happening at ICICI. The other big one is CASA ratio. That for HDFC Bank is still in the mid-30s, while for ICICI Bank it's about 39%. What this ensures is that the transmission of rates happens faster for ICICI Bank than HDFC Bank. And that shows up in the net interest margin picture. HDFC Bank saw a net interest margin reduction of about 8 basis points sequentially. Here it's about 4 basis points. This is happening because higher CASA ratio, faster transmission of deposit rates, better impact on the NIM than HDFC Bank situation. Lastly, on the loan to deposit ratio, because that is another thing that determines future profitability. At HDFC Bank at 98%, they're close to the max limit. So they can't really keep continuing growing the advances faster than the deposits for a very long period of time. On the other hand, ICICI Bank is sitting at a very safe 87%, so they have room to grow it further. HDFC Bank needs to worry about bringing the asset and the deposit growth around the same level or speed up on the deposit growth, without which actually future growth becomes challenging.
All right, Vishwanath, thanks so much for getting us all those important details and talking about these two banks and heavyweights in the banking space. HDFC Bank, take a look at that particular counter. In last half an hour of trade, that particular counter has really surged in trade. It's very close to its 52-week highs of 1,020 levels as well. So keep an eye out on that stock, while ICICI Bank is taking a breather and is in the red. With that, it's a wrap on this edition.